Good morning, dear colleagues.
Buenos días.
I hope you all enjoyed the dinner last night in Estonia concert hall. And you saw that walking on a rope is not difficult at all, so try it at home. We will continue with our conference, and we have two sessions ahead. First one will focus on collecting taxes in a more effective way. The first session sets out a series of examples of how national tax authorities are administrating taxes in terms of efficiency and effectiveness. Efficient tax collection is a major challenge for tax administrations and has a major impact on budget revenues. Moreover, the use of technologies and rise of economic systems are causing states to review the tax implications and deployment of technologies. In Estonia, we use digital solutions in everything we do. For example, 95% of people submit personal tax declarations online, and it takes around 5 minutes. Also, the policy of Estonia is, instead of raising taxes, trying to make some changes in the system, how to improve the tax collection. And for example, we've adopted also employees register, which really worked well, and the first keynote speaker, Mr. JEGOROV, will talk about it more specifically. And the second thing that Estonia adopted 2 or 3 years ago was VAT declaration new formula, which really helped to raise the revenues in terms of VAT tax paying. So once again, our idea is not to raise taxes, but to collect them in a more effective way. Now let me introduce you our distinguished speakers for this session. First speaker is Mr. Dmitri JEGOROV from the Estonian Ministry of Finance. Second speaker is from European Commission, Ms. Teresa FÁBREGAS. Both speakers will have around 15 minutes, and then we have time for a debate. And after the keynote speeches, I will give the word to my co-chair, Mr. Philippe DALLIER from the French Senate. And colleagues, to remind you, you can sign up for the debate already. You can request the floor electronically from the seat reserved for you. To register your request, please press the head button on your conference unit, and please follow the instructions on your desk. You can take the floor after the presentations, and we will address you when it's your turn. So, I would like to warmly welcome our first speaker for this session, Mr. Dmitri JEGOROV, the Deputy Secretary General for Tax and Custom Policy at the Estonian Ministry of Finance. Prior to the ministry, Dmitri JEGOROV worked for the Tax and Customs Board for almost 10 years. Mr. JEGOROV, the floor is yours.
Thank you, Remo. In the style of the reply that once a former prime minister gave on a TV show in the United States, I would like to reflect a little bit on the percentage of tax returns submitted to the tax administration electronically. So when Remo said that it's 95% of people who submit them electronically and it takes 5 minutes, well, that's not true. It's 96% and it takes 2 minutes. But the fact still remains. So let's talk about effective and efficient tax administration. First and foremost, there are certain prerequisites for successful tax administration, which also means that tax policy has to be an integral part of successful tax administration. It is absolutely very difficult to administer in a simple way complex legislation. So the legislation must also allow for easy administration of taxes. Also, it is always helpful to have process-based management and a service-oriented approach in tax administration. Of all the different administrations, tax administration is one of the easiest to be run as business just because it deals with money. Many other administrations are not dealing with money, and there are questions on how to assess their efficiency. But in a well-mapped process, everyone in the administration can see this, their place, and it is extremely important for people to know where their input comes from and where their output goes to. Audit and criminal investigation, if they are under a tax administration, especially for criminal investigation, this is also a service to society, to complying businesses in a country. And what is extremely important is that segmentation is done for customers, i.e. taxpayers, and this has to be based on solid data intelligence. Less paper, more IT, this is inevitable. This is true in many countries, coming to the rest of the countries. The economists say that taxes are deadweight. Well, they may be deadweight to economists, but they provide necessary finances for public goods, but definitely costly administration, unnecessary costly administration is surely just that. So a little bit of history. Tax Board and Customs Board were merged in Estonia in 2004. Prior to that, prior to joining the European Union, both administrations employed about 3,500 people. Now, approximately 1,500 people are employed in the joint administration. What was important that first IT of both administrations was merged. So before Tax Board and Customs Board were separate, they already had one joint IT. And joining IT is usually one of the most difficult processes in merging organizations. For service and control, there was full merger in inverted commas, which means that there was no distinction of tax department and customs department. Both service department and the control department were dealing with both tax and customs issues. A service-oriented approach was adopted immediately. So it's not tax administration collecting the taxes. It's tax administration facilitating for the taxpayers paying of taxes. So they see the role as helpers for those who want to comply. For e-solutions, an important point is that the tax administration did not wait for integral solutions, IT solutions for the whole country, and this is why electronic services for the tax administration came before we had an ID card with an electronic chip given as a digital signature. So it's never a stopper if you don't have the right infrastructure for the whole country yet. You can be the first one. For service, the important words are that or electronic submission is something that saves time to do business. And business should be focused on business, not on paying taxes. We do pre-filling of tax returns. We have done this for quite some time. Again, this saves time both to business and to taxpayers. We have enabled faster repayment of income tax if the tax return is electronic, and this was one of the incentives for people to want to submit tax return electronically. It was done within 5 working days, and we had people lining up in the tax administration office to use the customer computer, and we had lines for people waiting there 1 hour, 2 hours, because they didn't know how to do that, but they had specialists there to explain and to help. And then we had people sitting at the desk, service desk, to submit a tax return on paper, and there was no line there because everybody wanted to get their money within 5 working days. So these are kind of incentives you can use. There is an obligation for electronic submission of returns, tax returns for businesses if there are more than 5 entries on the tax return. It's always only electronic for public institutions, whether at central level or local level. So there's enough computers for everyone. They have to use that. And we also encourage shared economy platforms to enable submission of tax data from their users to the tax administration. We have Uber cooperating with Estonia, so if you're a driver who's driving Uber in Estonia, you have an ability to tick a box, and then your income data will be submitted to the tax return, to your tax return, to be pre-filled. More than 80% of information from Uber drivers on their taxes comes from this option, so it's fairly popular. The E percentage for natural persons rose from 3% in 1999 to 96% for 2016. For the past 10 years, it has been above 90% in all years. As I said, data intelligence is very important, so checks and risks analysis are automatic. So it allows us to repay income tax within 5 days, and also VAT repayment to business customers, for most of them, goes about 2 or 3 days because of these automatic checks. Here you have a slide showing the evolution of service. So as long ago as 2000, we had it on paper, and 99 was the first one to be able to submit electronically. Then we switched to e-service and started pre-filling in 2004. We ended up with 5 clicks declaration in 2007. We introduced a smartphone tax return in 2013. And since 2015, it's a one-click declaration. So you open and you agree that the data is correct, or otherwise you would have to alter the data. And the next step will be no touch. So we wouldn't even want that one click. So you open the declaration, you see everything is correct, and then you don't have to do anything. For control, as I said again, and I will never be tired of repeating this, solid data intelligence is the basis. So access to databases is extremely important for tax administration, but data protection also is very important. This allows the tax administration to know more than it can handle, because this will give them the ability to prioritize largest fraud. And as tax administration is an expense, it's a cost. It's better to see them bringing in more money per every euro they spend on their costs. There are no blind or random audits, because this is a waste of resources when you have information and you can go exactly where you know where risks are. We use information letters to save on resources. So the rule of the thirds say that when we know some risk and we send these letters to taxpayers, 1/3 reacts and changes their tax returns to the better. 1/3 is able to explain why the data is different, and the last 1/3 does not react, and this is the one that will be audited. So this is how you basically cover 3 times more of non-compliant taxpayers, or potentially non-compliant taxpayers, with the resource that you have. And by the way, aggregate data on most taxes paid for businesses is public in Estonia. It is aggregate. It does not disclose a lot of business secrecy, but anyways, it helps to see whether your competitors pay enough taxes or not. So the 2 things that Remo mentioned in his introduction are the register of employees and the so-called VAT inf, or the VAT summary declaration, that allows us to see much more than what we used to see. So there is obligatory registration of employees prior to starting work. Even if the information systems are not online, you have to send in an SMS, and that means that the tax administration does not see anymore such a case when they come to, for example, a construction site, and they are being told that these employees are there for the first day. So this cannot be true any longer. And what we witnessed is 4% registered employees number in 6 months after the introduction of this register of employees. The detailed tax return on VAT means that all transactions with parties over 1,000 euros per month must be reported to the tax administration separately from the buyer and from the seller side, so that cross-checks can be done. And what we saw is a 5% VAT revenue increase in 1 year without raising taxes. This is a lot of money, and this allowed us to see a decreased VAT gap. So here on this slide, you see in blue the share of unregistered employees after the introduction of employee register. for various sectors. And the red one was the immediate effect, and the green lines above is what we estimated to be the share of unregistered employees prior to the register. And here on this slide, if you look at the two last columns, 2014, 2015, is the effect of the VAT detailed report to the tax administration. So right now we're running at about 5% VAT gap, meaning about 5% of VAT is not being collected of the potential VAT. Something that we will be introducing soon is giving back the data to the taxpayers and allowing it to share this. What you see on the left slide is the risk assessment of every taxpayer based on categories, whether this is the risk of not showing enough profits, whether it's risk of VAT, or whether it's a risk of unregistered labor. And this will show the taxpayer what tax administration knows about him or her, and allow the taxpayer to correct the behavior to see all fives or the top scores on this report. But not only that, the business will be able to download and share this report with its partners. And what we think is going to happen in future is that unless your partner is willing to show you their risk report, you will not be dealing with that partner from a certain point in time. And we also want to give the statistics. So we do have the data, and we will be able to show you, if you're in business of construction, how are you doing compared to your competitors? What are their averages? What are their average salaries? What are their average turnovers in that respective region, in that particular line of business? And this is a valuable information in terms of business analytics that most of the SMEs just don't have the time to perform. We will be able to do that for them. A few words about revenue management. Debt must be collected while it's fresh. We consider that debt over 6 months is old debt, and most likely it's not going to be collected. So it is very important that debt management is swift and quick in action. There is a possibility to apply for installment in Estonia, and the automatic decision based on risk will be issued without officials even looking at this application. But of course, this can only be done once, and then if you don't stick to this plan, then officials will, of course, take care of that. But it is also possible to ask for installment schedule even before the debt occurs. So if you already know that you will not be able to pay the tax in future, you are able to ask for the installment in advance. We say that fair taxes, fair administration of taxes is when honest business has the right to a good night's sleep, meaning that tax administration has to take care that non-compliance is dealt with, and including seizure in case of tax debts, and removing the unfair competition. We are completely open about all tax debts. All tax debts are published. And we also closely monitor transfer of business and leaving empty shells, because this is a huge problem when debts are left into the old legal person and all the activities are taken to a new legal person. So the best way to fight fraud for us is to cooperate with business. It's like a best way to fight a disease, the triangle rule. If the doctor and the patient are together against the disease, then the disease will be taken out. But if the patient is with the disease, then doctors are helpless. The same case is here. Cooperation and trust with professional organizations is extremely important. They know best how their line of business works, and they are able to explain that to the tax administration. And also when the tax administration leaves the room, they're able to talk openly and honestly to the members of their association. They have an eye for when a partner speaks truth and a partner is not speaking truth, to put it more mildly than it is written here on this slide. So peer pressure actually does help boost tax morale. A word of advice. As I said before, tax policy is a crucial element, and indeed, meaningful policy is crucial for successful tax administration. It is very difficult to administer in a simple way a complex tax policy. In Estonia, if social tax is not paid on salaries, then employee has no social security, and so employees avoid unregistered labor. They're not motivated to take up unregistered labor. Company car usage will be cheaper on a monthly basis from next year, but linked to the right of use, avoiding complex accounting of actual use of cars. There will be a business bank account for small entrepreneurs up to 25,000 euro, where banks will hold 20% on revenue and transfer to the tax administration to cover for all taxes. So no accounting, no contracts, no checks, no receipts, but also, unfortunately, no cost deduction. So this is a good balance for the system. And of course, taxpayers' willingness to comply depends on them seeing politicians spending their money. This is also a crucial element for tax moral. 2 last slides. Where to go next? For the administration, in the future, we don't want any tax returns. Because what is a tax return? It's the same tax data that the taxpayer already has in their computer or in their books, and we don't want a return. We don't want a return, we want the tax data. So we suggest to link the systems of tax administration with the accounting systems of the taxpayer, and for that we cooperate with 12 different producers of accounting software. And in the future, those who have this software, which basically covers 80 to 90% of the market, these businesses do not have to submit tax returns at all. We believe that blockchain for administering VAT and excise taxes is the future. You know, blockchain being one chain of data, decentralized, based on consensus, it cannot be changed retrospectively without knowing that something has been changed in this set of data. VAT and excise transactions can have their so-called fingerprint. That means that we are able to say that the tax return submitted to us or the data that we have has not changed in the past, but it's also secure because just as on the border you're not able to construct a person by knowing his fingerprint, you only have the ability to say that this person is the right person. And of course, in terms of carousel and other types of fraud, the tax people will get immediate attention to, immediate signal to where the fraud is occurring, and not like it is now. For example, in Estonia, the VAT return must be submitted on the 20th of the month following the tax period. So on the 20th date of the month, we know exactly where fraud happened, who it happened between, and how much money we lost. So that needs to be dealt with, and we need to know not the next month, but the next day. In terms of policy, digital is, of course, on the rise. But the biggest question, we all agree that value creation place is where tax has to be paid, but we haven't agreed what value creation is. So where is value created is actually one of the largest questions for corporate income tax. We are so fixed on physical locations and physical assets. You know, permanent establishment rules depend on all things physical to say where tax has to be paid. But digital business does not need physical assets to the degree that normal business needs it. And digital business certainly does not care for physical locations. So the rules do not work any longer. The rules that come from the middle of 19th century old-time Prussia on permanent establishments. Of course, in 19th century, there was no digital economy. So it's about last time we need to change those rules. And also collaborative economy and digital nomads. What is the future of working? We see people working 1 month in one country and moving 12 times per year. Where are they working? Where is their social security? Are they going to pay taxes to where the public services are best? These are the questions that are asked already and will be asked even more in future. There are certain anonymity concerns of blockchains, so they're not regulated by the government, and we should decide whether we trust them and whether there is enough precautionary mechanisms to allow us to trust them. What is the role of collaborative economy platforms? Should they allow for anonymity or should they provide the information maybe not on a voluntary basis, but on a compulsory basis to tax administrations. Is there an end to consumerism due to sharing? So if a true sharing economy allows one neighbor to buy a drill, another neighbor to buy a lawnmower, and all of them to share between them, does that mean that purchase of services will decrease in the future? These are very important questions that we will be facing quite soon. That will be the end of my presentation. I thank you for your attention.
Thank you, Dmitri.
Muchas gracias, Dimitri.
Find the presentation in our webpage if you want to take a look at it.
También podrán encontrar la presentación en nuestra página web si quieren verla en mayor.
And it's parleu2017.de is the address, so you will find Dmitri's presentation from there. Now I'm delighted to give a floor to Ms. Maria Teresa FÁBREGAS. Ms. FÁBREGAS is the Director for Indirect Taxation and Tax Administration at the European Commission. And previously, she has served several positions in the Commission as well. So the floor is yours, please.
Thank you, Mr. Chair. Honorable members of Parliament, ladies and gentlemen. So it's a pleasure for us, the European Commission, to be here to talk about efficient tax collection, which is a common challenge for all of us, in particular in the global digital environment in which we are living now. So in the European Union, EU member states, taxes are the main revenue for financing public expenditures and structural reform. However, tax system may be complex and burdensome, resulting in high compliance costs for taxpayers or even non-compliance. Moreover, for tax administrations, the costs for collecting taxes are high. The cost of running most EU member states' tax administrations may be between 50 cents and 1.5 euro for every 100 euro collected. So in particular, in times of financial constraints, staff cuts, expensive IT investments, these administrative costs put a huge pressure on tax administrations. The European Commission recognizes the importance of tax collection, and it is a key priority for the European Commission to create a framework in order to provide for a deeper, fairer internal market where everybody, citizens and business, should pay its fair share of taxes. In the State of the Union speech of President Juncker, he mentioned that Europe's economy is recovering and that it is time to catch the wind on our sails. However, this economic revival does not automatically imply that all taxpayers pay their due taxes. For instance, if we look at the VAT gap study in the European Union that was published at the end of September, there is still a major gap of 151 billion euros between the overall difference between the expected VAT revenue and the amount actually collected by each member state. Also, the Panama Papers recently published a report of the UK House of Commons on VAT fraud in the field of e-commerce, about 1 billion to 1.5 billion pounds, raised concerns about tax collection and calls for action from both member states and also on the side of the European Commission to improve this tax collection. So we consider that we should look at two fronts. The first important aspects to discuss concerns the tax system as such, the legal framework, its fairness and transparency. That is about the tax legislation, and it's really important to modernize and simplify tax rules that are at the core of our initiatives in the Commission in order to make it easier for citizens and business to understand where and what taxes they have to pay and to comply with. Examples of this relate, for instance, in the VAT area to the current Commission proposal on e-commerce, on facilitating cross-border trade for e-commerce in the field of VAT, which is going to the ECOFIN next week. And we thank the Estonian presidency for all the efforts in order to try to find the necessary consensus to reach the unanimity on this file. We also, from the Commission side, have presented at the beginning of October the first steps of what we call the definitive regime on the VAT system in order to create a single European VAT area and eliminating the risk of the carousel fraud or missing trader that exists today. And at the end of November, the European Commission will be presenting more rules in order to simplify the VAT systems for SMEs and also to modernize the VAT rates and to reinforce the instruments that tax authorities have in terms of administrative cooperation. Also important to highlight that the European Commission is working on a digital tax, which brings us into what Mr. JEGOROV just mentioned about the challenges of this old-fashioned legislation that needs to be updated. So the second pillar, the second aspect for efficient tax collection relates to the system of collecting taxes itself. It is about procedures and processes on how efficient and effective a tax administration functions. Mr. JEGOROV has mentioned how Estonia is dealing with the issues. So to collect tax revenues in an efficient and effective way, tax authorities aim at achieving as much as possible that taxpayers voluntarily comply with tax obligations. For that reason, a reliable, effective, and efficient operating tax administration is needed. Tackling tax abuse can create the space needed to lower the tax burden for honest taxpayers and contribute to establishing trust in tax authorities and increase voluntary compliance. Nowadays, digitalization, globalization, new business models such as e-commerce and the collaborative economies, tax fraud and avoidance, and resource constraints urge tax administrations to review their practices and find additional or alternative ways to collect taxes. Tax administrations are aware of these challenges and have taken action. Over the past year, many tax administrations, for instance, reformed their organizational structure. So they changed from a tax type-based administration towards a tax administration organized around types of taxpayer, being large companies, SMEs, private persons, or functions, registration, filing, payment, that is putting the taxpayer in the center of the tax administration activities. They also offer services to taxpayers, as we have seen in Estonia, to assist them in fulfilling their tax obligations, being registration, filing of tax returns, payment, and accounting, by providing information on websites, online registrations, pre-filled tax returns, electronic filing, and payment. In addition, there is an increasing use of intelligent technology and risk management. Data mining and risk analysis are playing a growing part in compliance and audit initiatives and offer tax administrations better decision-making when it comes to allocation of resources. So striking the right balance between voluntary compliance and enforcement in tax collection is a major challenge. Therefore, topics such as data processing and analyzing, compliance approaches, building trust, fight against tax fraud, human budget resources, and administrative capacity building are priorities in most of tax administrations. So from the Commission side, we consider that it's really important to enhance the efficiency of tax collection as a priority. In the context of the European semester, the Commission puts emphasis on the efficiency of tax collection. In particular, it looks at the role of tax administrations in ensuring tax compliance and in creating the right business environment to boost investment. To stimulate investment, innovation, and entrepreneurial initiative, it is important to develop the right business environment for investment in the EU. This includes cutting compliance costs, in particular by increasing efforts to digitalize tax administration, which can then facilitate tax compliance, and equip the system to new realities, for instance, by making tax administration more customer-centric. Initiatives in the framework of the digital single market, such as e-government, go into this direction. To combat tax fraud, evasion, and avoidance, it is important also to increase cooperation between countries and improving administrative capacity. For example, with joint audits, sharing of information between countries. At the same time, promoting trust, transparency, and a culture of tax compliance also matters. This can rely, for example, on communication and education campaigns to strengthen taxpayers' morale and show to taxpayers the value delivered through tax revenues. Under the Fiscalis program managed by the European Commission, we are doing some relevant activities in this regard together with the tax administrations. In order to identify potential challenges faced by member states, we use indicators such as the time needed to comply with tax obligations, the offer of digital services, and those are available in the annual report called Tax Policies in the EU survey, which will be published in mid-November. Another assessment of efficient tax collection is done in particular on the VAT area in the framework of the VAT own resources of the European Union. The so-called Article 12 report evaluates the performance of tax administrations in the core functions of VAT administration, being registration of taxpayers, filing and paying VAT returns, and VAT controls. The 2017 report will be published before the end of this year, together with two other reports, one on the evaluation of recovery assistance between member states, and one about exchange of information in the field of direct taxation. But the Commission is not only assessing member states' performance, it is also providing support, and this is done via the so-called Structural Reform Support Service, SRSS, which provides, facilitates, and coordinates technical assistance to member states in different policy areas, such as revenue administration. Its financing instrument, the Structural Reform Support Program, is available to all EU member states upon request without any requirement for co-financing. The important thing is that the projects have to be in line with the EU policy priorities, and in this regard, the ones to enhance tax administration's capacity to collect tax. Improving the effectiveness and efficiency of the work of revenue authorities should start from an open, structured, and strategic dialogue between the Commission and tax authorities. And we can best tackle the mutual challenges of tax administrations by EU sound and effective solutions while working together and more closely. And this is the reason why in the communication adopted by the Commission on 4th of October on the VAT modernization of the legal framework, the European Commission mentioned that we will launch a strategic dialogue next year between tax administrations and the Commission. Again, as mentioned by Mr. JEGOROV, digitalization provides new means to ensure tax compliance and to facilitate enforcement. New technologies, such as blockchain, can be also a tool to implement the objective of an efficient tax administration. Enhancing tax compliance in e-commerce is a major challenge, and in addition to the proposal which is now being negotiated in the Council, the Commission is already looking at possible additional tools for tax administrations in order to fight against fraud or tax avoidance in this field. In addition, it is really important to fight against tax abuse, and this fight doesn't rely only on enforcement, it also relies on facilitating and promoting voluntary tax compliance. And this includes exploiting better cooperation with businesses, communication, and educational measures to promote a culture of transparency and tax compliance. To conclude, collecting and safeguarding tax revenues is the main task of tax administrations. We are convinced that the challenges that the tax administrations are facing can be tackled when they all join forces and work together. Close cooperation will bring benefits to all, and we, from the Commission side, we are ready to assist and to facilitate this cooperation as much as we can with the available tools. Thank you for your attention.
Thank you, Ms. Fábregas. And now I'm pleased to give the word to my co-chair, Mr. Philippe DALLIER, Vice President of the French Senate and member of its Finance Committee. Mr. DALLIER participated in the Senate Working Group on Taxing the Collaborative Economy, which also prepared a report on the subject last year. Please.
Merci, Monsieur le Président. Mesdames et Messieurs, mes chers collègues, je voudrais tout d'abord remercier le Président du Parlement estonien.
Thank you very much, ladies and gentlemen. First of all, I would like to thank the President of the Parliament and the Vice President of the Financial Committee for inviting me here, because this enables me to share with you the outcome of our work regarding the VAT collection and collaborative economy in the field of VAT. And I would like to give you information about the changing rules when it comes to the changes of the VAT regulation. There was a change which was adopted last year, and we're looking at the tax collection at the moment when the revenue is created. Because in France, we have a pre-filled form which allows you to declare your taxes, and 40% of the French people use the system. It's quite an efficient system, but the problem is that the tax is collected about a year later. So we decided to change this rule, so we would have the tax collection which will be immediate. It'll be withheld by the employers based on the payroll, and so as it's done in other EU countries. So we decided to deduct the tax right away when the income is generated without the time lag. So we had some difficulties with this reform because the income tax is not personalized and the calculations can be quite complicated. It depends on your family setup, takes into account other income in addition to your personal salary or revenue, and it's progressive. So it can be quite complicated because you have to deduct also certain expenses. So the tax rate of a specific taxpayer depends on other factors which your employer doesn't know and do not need to know. Mr. JEGOROV said before that it is complicated to simplify things when you have a complicated system to begin with. And we really feel it in France because the employers now have to act on behalf of the tax authority and the rules are complicated. So therefore, we decided to implement this reform where we are trying to simplify the life of taxpayers, but it's quite likely to make things harder for the companies. We have two other topics we're discussing, which are related to the digital revolution. So this changes the purchase habits and also the sales activities for companies and private persons, because we can see that the services are increasing, and by year 2025 it could be over 500 billion euros in Europe alone. So there are many issues which we need to cover in this field. So how we can now separate a private person when we have a person who is sharing the car and you have a professional who is using the Airbnb system. So how do you tax the private person income, which is based on shared economy? As Mr. JEGOROV said, then Estonia has been a pioneer in this particular field. In France, the legal system has also been changed. The Airbnb platform is collecting tourist tax in Paris since 2015, and now it's done in more than 50 cities, as it happens in the United States or in other countries. For us, the collection of the tourism tax through Airbnb platform was a test. So it shows us this actually helps us to collect taxes. The Finance Committee of the Senate submitted amendment of the taxation regulations where we wanted to see automated income reporting on behalf of the taxpayers by the platform. So this amendment should come into force next year. So we have asked a lot of questions and we have talked to a lot of stakeholders. Should we have voluntary or obligatory tax return filing? How do you identify the taxpayer? How do you identify overlap? What kind of guarantee do you need for data protection? So when we carried out this work, we realized this automated declaration cannot be successful unless you carry out another reform, which is the declared income tax reform. In France, all the private person incomes are taxable from the first year onwards. But when you have very small additional incomes, we do not really verify, nor do we actually apply these rules. But already tomorrow, when these platforms are starting to declare these revenues in an automated way, we will know about all these little revenues. So we propose to start using a tax-free minimum, which will be 3,000 euros per year. And this helps us to separate the private persons and professionals, and from there on all the rest of the income is taxed on equal basis. So this discussion is not yet over in France, but other countries have been already able to put into use this kind of system where the tax-free minimum was increased to 6,000 euros. So the UK, for example, in Belgium as well. So this report has been prepared. It's also available in English, and we have comparative data about the UK, about the United States, Belgium, Italy, and Estonia. Of course, it is beneficial for all of us to cooperate because we have all drawn the same conclusion. It's better to have a little bit lower rates if you have more efficient and fair tax collection. And of course, this is only the first step because automated declaration or tax return filing can be also applied across Europe. The last topic I would like to cover is a very important challenge. And this concerns e-trade, and a great deal of the expenses in the field of VAT goes missing if you look at the Amazon, eBay, and Alibaba, because right now we know that VAT is not taxed at all. Mrs. FÁBREGAS also said that the Commission is aware of the extent of the problem, and this is very good because 2 years ago the Senate proposed an idea to tax VAT, which is deducted from the moment of transaction. The UK has started to use a system where we have joint and several liability of platforms. So this is a kind of split payment system which presumes that the rules across the EU will be changed accordingly. And talking about the system which is used by the UK, where when we have a seller who's not paying the VAT, then the platform is responsible for the VAT payment. So all these are possibilities which are worth considering because they have an important financial impact. And now it's a good time to exchange these ideas and experiences. Thank you.
Thank you, Mr. DALLIER. And now we can move on with the debate. I would like to hear your remarks, comments, experience from your country. And we will start with Mr. Pedro Saura from Spain, please.
Microphone, please, for the speaker. Microphone.
Sorry, you don't have to push any button. Don't touch the microphone. It will start automatically. Yeah, it's working now.
Gracias. Well, thank you, Mr. Chairman. Yes, in fact, I'm very interested in this mix of both technology on the one hand and big data, the information and what you do with it, the analysis of that information from two standpoints. First, to increase our revenues, but also on the side of the equity, of the fairness of the tax system. I'm considering the ability of measuring the capacity of paying up for each single taxpayer for the system to be fairer. For instance, for VAT, reduced rates make the system more unfair, according to the analysts. Have you considered a general VAT rate for all consumers and all products, but automatically subsidizing those low-income consumers who are buying first need products or goods? That would be a means to make the system more fair and equitable. Co-payment or share payment, everybody has to pay their part of drugs or pharmaceutical products. But if some low-income taxpayers were subsidized, then the system would be fairer. Thank you.
Thank you. Mr. Christos Staikouras from Greece, please.
Thank you, Chairman. An efficient tax system should be governed by certain principles, such as transparency, neutrality, simplicity, stability, functionality, balance and fairness, aiming at enhancing growth. Unfortunately, over time and cross-country, there are often obstacles in achieving these principles. In Greece, over the previous 7 years, with our partner support, substantial steps have been taken at institutional, functional, and operational level. Based on best EU practices, interventions have been introduced to fight tax evasion. Tax administration has been equipped with proper legal tools to achieve better tax compliance. New codes have been introduced for depicting tax transactions, for income tax, and for the tax process to limit accounting complexity. New technologies and risk management were incorporated in tax administration, while the use of electronic transactions widened. Know-how was created to find and analyze data for bank accounts. The regulatory framework for combating tobacco and fuel smuggling has been strengthened. And finally, the independence of the Public Revenue Authority has shielded. However, many more should be done to improve the effectiveness of tax collection. Reduce direct and indirect tax rates. European Commission reports indicate that the VAT gap reached its lowest level in Greece in 2014, when specific tax rates were reduced. Enhance international joint cooperation, exchange information, solve data intelligence, apply common taxation rules, and align tax policy at European level. For example, taxing labor heavily, as is the case in Greece, boosts brain drain. Intensify tax audits, train tax auditors with real-time data, adapt technological changes, and invest in digital economy like Estonia. And finally, improve tax compliance and enforcement in the field of shared economy, a rapidly expanding economy and industry which consists an emerging tax risk, especially in member states like Greece, which relies heavily on sectors like tourism. Thank you.
Thank you. And now Mr. Emmanuel Malia from Malta.
Thank you, Chair, for giving me the floor. The debate on fair taxation at the European level has been gaining momentum for a number of years. However, the Commission's legislative proposals on taxation issues must remain within the limits of the treaty and ensure the objectives cannot be attainable at the national level. Many of the proposals pushing for more consolidation that have been referred to in the debate earlier on, such as the CCCTB, to mention one example, would not only impact badly the fiscal revenues of smaller member states, but would also weaken the principle of fiscal sovereignty. I take advantage of this interparliamentary conference here today, which has brought together decision makers from the national parliaments of EU member states, to voice my sincere concerns. I would like to ask the Commission, how does it intend to create a balance between increasing efficiency in tax administration on the one hand and respecting fully the principle of fiscal sovereignty on the other? Also, how does it intend to offset the negative impact that some of its proposals would have on the economies of smaller member states if they had to enter into force? This is hugely politically sensitive debate, and I honestly believe that the different characteristics of all member states must be taken into account. Malta agrees with fair taxation and enhanced transparency. However, I reiterate that fiscal sovereignty must be safeguarded because it falls under the member states' national competence. If the European Commission proposals are to yield positive results, it must uphold the principle of subsidiarity and fiscal sovereignty and reflect this through an adequate degree of flexibility at the level of the member state. The Commission must try to recur to less intrusive measures that lead to the achievement of the objectives identified in its proposals without interfering with the principles of subsidiarity and proportionality. This would ultimately increase member states' trust in the Commission and facilitate outcomes in negotiations between member states. Thank you, Chairman.
Thank you. And now Mr. Duarte Pacheco from Portugal, please.
Mr. President, dear colleagues, we have in our country an efficient tax administration after 10 years of investment that also merged institutions, departments, and create an e-system as well. Of course, we have a lot of things to do. It's always possible to improve. For instance, we have an e-receipt that gives information to the tax administration and also incentives to the taxpayers with a reduction of the taxation. But we need, and we also have a report about fiscal fraud that is presented to the Parliament every year by the Minister of Finance, and we will debate this in our budget committee. But people need to feel that the system is fair. And for this, we need more harmonization at the European Union. For instance, the big companies left Lisbon and put their headquarters at Netherlands because the fiscal system there is better for them. And also, we have offshores inside the European Union. And a lot of people, small companies, small entrepreneurs, and families think that just them are paying taxation because a lot of the big ones are left in the country. So we need to discuss all of this inside the European Union if you wish to have a fair system as well. Thank you.
Thank you. And now Mr. Aivar Sõerd from Estonian Parliament.
Thank you, Chair, very much. If we talk about modern tax system and modern tax administration, we mean the system or environment where taxpayers' controls and taxpayers' services are at the right balance. Countries have made success in the field of electronic filing and pre-filled declarations. For example, Estonian representative talk about our experience. In Estonia, we have electronic filing system and pre-filled declarations already created 17 years ago. But if we talk about pre-filled declarations, we mean direct taxation, we mean income tax declarations. But we should make progress in this regard also regards of VAT declarations. Estonian representative talk about our progress in the field of VAT transactions controls. Of course, it's a very important step to fight against fraud and controls, and but we should also think about modernizing VAT declaration systems, and therefore I raise the question: how far are the preparation for pre-filled VAT declarations? I know that OECD can support member states in this field, create some programs. Therefore, if we talk about pre-filled declarations, we have made big progress in this field regarding direct taxation and income taxation, but maybe it's time to modernize VAT system and create VAT pre-filled declarations, as the system is running in the field of income taxation. Thank you for your attention.
Thank you. Colleagues, please hold your remarks within 2 minutes, because I would like to give the floor back to the panelists for answers and remarks as well. But we will continue now with Mr. Dmitri from Greece, please.
Dear Chairman, regarding tax efficiency and surveillance mechanism, we have to revise the basic concept which passes through the VAT information exchange system, the well-known VIS document. According to the old-fashioned existing approach, all market players provide information in an electronic way about invoices, pro forma invoices, once every month. The recipient of this information is the Commission of the EC. If this information is provided daily, then tax evasion, smuggling, and all the well-known tax diseases will be drastically reduced. This means that, following this idea, nobody will be able to hide or to make disappear information about invoices and all related documents. Thank you very much.
Thank you. And now Mr. Igor Pimenov from Latvia, please.
Thank you, Chairman. I would like to ask two particular questions to Mr. Yegorov. Estonia is a unique country where the corporate income is not taxed unless it is paid out in dividends. It lets entrepreneurs accumulate funds for further investments. How does the tax administration manage the risk of withdrawing of the untaxed income for abroad and thus losing taxes? And the second question is as follows. In many countries, and in my country, Latvia, indeed, the employees do not pay their personal income tax themselves, but instead of them, their employers are obliged to deduct the salaries and pass the PIT to the budget. Obviously, this procedure can be implemented by means of modern information technologies if all necessary data is timely provided to the database of the tax administration. So they say that something of this kind has been already established in Estonia. Is it true? Thank you.
Thank you. And now Mr. Ralf Brinkhaus from Germany, please.
Ja, vielen Dank.
Thank you very much. First of all, thank you very much for last night. Last night was a very beautiful night, very well organized. Thank you for that. And also thank you for today's topic. We've never done it like this, but I believe that taxes constitute a very important topic for the European Union and the Eurozone. We're talking about efficiency, so thank you very much for what Estonia has been pointing out. We have to catch up here in Germany, and we're willing to learn because I believe that a lot can be improved. The second aspect, which was also touched upon by the European Commission, is the issue of fairness. Yesterday we talked a lot about solidarity between individual member states. It's always difficult to talk about solidarity with countries that on the one hand want to get funds from the European Union, but on the other hand are unable to collect taxes from their own citizens, either because the shadow economy is very high or the tax debt is very high. So we can only say European funds can only be made available for those countries that are able to collect the taxes from their own citizens. And secondly, tax dumping, which was also mentioned by one of the previous speakers. It's not acceptable that aggressive tax dumping is a policy pursued by some countries within the European Union, so we, the national parliaments, should very actively counteract that. What are the solutions here? There are two solutions. I first believe that we need a common corporate taxation law in Europe. You can still be sovereign by working with the different tax rates, but we need a common corporate tax rate to establish a tax base in a fair way so that we have a real comparability between the individual member states. And secondly, we are seeing a lot of problems in the field of VAT. There is a lot of fraud in that field. There are missing trader intra-community frauds here. So why do we have the reverse charge model within the European Union? That's a question directed at Ms. Fábregas. We always hear that the reverse charge model for VAT is being blocked by the Commission. Maybe this is wrong information, but I'd be happy if today we could send out a signal that the reverse charge model could be introduced. Thank you.
Thank you. And now Ms. Provence Perez from European Parliament, please.
Merci, Monsieur le Président. Je veux joindre ma voix au précédent orateur en félicitant la présidence estonienne.
I would like to agree with the previous speaker. I would like to thank the Estonian presidency for carrying out their duties a little bit prematurely because of Brexit. As regards our topic of the day, we are concerned for several reasons. I would like to thank the speakers. They have emphasized the issues of digitalization and data processing matters in regard to tax collection. But we see the danger in the fact that the development of the new technologies benefits also those who work against efficient tax collection. It helps to optimize taxes. So we are talking about a kind of a race here between tax optimizers and tax authorities. Another aspect is that automatic data is very important when we want to make tax collection more efficient, and the digital world benefits us in that. But we must ask ourselves, are tax authorities able to process the data they receive? Can they accept data submitted by countries? And does this enable the companies to do what they actually promise to do? And lastly, efficient tax collection means smart tax collection. And in this, the support of national parliaments regarding the proposals discussed here on company taxation is very important. I would also like to say that we need to make sure that budgetary restrictions are not applicable to tax authorities. Tax authorities need to be able to cooperate, and this is very important when we talk about tax collection. Thank you.
Thank you. And now Mr. Antonio Misiani from Italy.
Thank you, Chairman. In Italy, over the last 5 years, We have put in place a number of actions to combat against tax evasion and tax illusions. We introduced split payments in the whole public sector, reverse charge in some sectors of the private economy, and we have automated and digitized several procedures, including we are introducing electronic invoicing. We have merged tax administrations, and we have adopted 2 measures of voluntary disclosures for capitals abroad, and we have put in place a number of international agreements against tax evasion and delusion and tax evasion and avoidance. And in a country where tax evasion and tax avoidance are high, we have seen clearly a reduction of the tax gap, especially in the VAT sector, and the fight against tax evasion in 2016 was 50% more successful than 5 years ago. In 2017, we introduced an experimental and provisional web tax on web-based corporations that are suspected to be stably operating in Italy, and we enable these companies to make agreements, to enter agreements with the tax authority. And we introduced a flat tax of 21% on short-term tourist rentals through the web, like Airbnb. Of course, a homogeneous European-wide taxation of digital economy is the main avenue, and we are very favorable to action by the European Union in order to tax corporate taxes, to tax companies, especially web-based companies, because we believe that is the main road in the future to fight successfully against tax evasion by web-based companies. Thank you.
Thank you. And now Mr. Martti Talja from Finland.
Thank you, Mr. Chairman. Dear colleagues, the session has been very good, and good ideas should be analyzed and multiplicated for use. Regarding this topic with view to best practices on tax administration, I would like to share with you an example of national initiative we are discussing at the moment at the Finnish Parliament. This project is called National Income Register, like it has been discussed here in also concerning Estonia. The new idea is to collect comprehensive wage, pension and benefit data at the national level in one digital register. The first phase of register should be operating already in about 1 year, and the new legislation is discussed in good cooperation with all parties. This would significantly reduce administrative burden and at the same time help to combat the grey economy. This becomes even more essential in the future if traditional work contracts will increasingly change into more flexible and project-based work. Later on, the register can also be linked to the so-called basic income project that is currently at the pilot phase in our country. All in all, this is the practical example of a national reform that is linked both to digitalization and challenges that we are facing in the future concept of work and rapidly changing labor market. And at least I would like to stand beside Mr. JEGOROV's idea of concerning black blockchains in administering what and exercise taxes. The idea is good, and we must think this concept at EU level and also include example transfer pricing in same kind of blockchains. Thank you.
Thank you. And now Mr. Marios Mavridis from Cyprus, please. Sorry, don't touch it. It should work. Oh yeah, now it's working.
Okay, thank you. It is clear that the use of technology improves the efficiency of tax systems, enhancing tax collections, increasing the tax base, and improving the fairness among taxpayers, individuals and businesses. I strongly believe that the best way to increase the efficiency of tax systems is to have lower taxes and less taxes in general, tax rates and less taxes in general. However, this is not the topic of today's meeting. I would like to ask Mr. Dmitri JEGOROV whether there are any tax efficiency and tax compliance indicators in Europe and elsewhere which are comparable between them so that we can see which countries are doing a better work than others. It will be interesting to find out whether tax efficiency and tax compliance are related to other variables not discussed here, such as the size of the tax burden, government regulation, etc. Reducing tax evasion and tax avoidance are two of the major goals of a government. Now we see that tax efficiency is as important as the other two. Thank you.
Thank you. And now Mr. Eric Vert from France, please.
Merci, Monsieur le Président.
Thank you very much. Well, I could say that in general terms, in many countries, the tax collection is something which functions quite well. But the fact of how complicated the system can be has a big impact. Many speakers mentioned it as well, because first thing is that we need to set certain terms in place first, because I do not think the definitions have been clear enough, and we have experienced it, because in order to collect taxes better, we need to define them better, and this is true for taxation, and this concerns everybody. For example, if we talk about transfer pricing, or the same is true for the intellectual property or permanent establishment, and we need to know what kind of expenses can be deducted. We need to have an improved cooperation between our tax authorities. Automated data exchange is important, but there are other ways of cooperation as well. What is important is that we'll be able to continue our cooperation better. We need to harmonize our control functions and certain taxes where we can see extensive amount of fraud, such as the VAT. This is something which has been mentioned quite a few times. But we discussed it yesterday. We talked about the corporate income tax, and the German colleague said that we need to go further and we need to move quicker for the harmonization of tax base. We need to be able to support all these initiatives in this field, and these are the initiatives which go further than the EU initiatives. We do not have to stay within the confines of the EU. We need to think of about the BEPS system as well, BEPS. So one thing which is important is legitimate fiscal competition and fiscal competition which is based on dumping. These are the two different things. We need to look at the calculation of taxes and how they're being collected when the member states talk to each other. We do not need to misuse the terms, especially when it comes to fiscal sovereignty.
Thank you. And the last intervention comes from Mr. Kai-Jan Kreiner, Austria.
Yes, I always understood that subsidiarity doesn't mean that the national level does everything or things that it likes best, but that the layer of administration being national, being European, being regional, or the municipality level that is best fit for the task and has the best results for all is the level that should do the work. And just as we, I think, rightfully concluded that European banks or banks of a certain size and that are working in 3, 7, or 10 European countries should not be supervised on a national level, but should be supervised on a European level, I think we should also rightfully conclude that companies of a certain size and or that are operating in 3, 7, or 15 countries in the European Union should not be taxed on a national level, but on a European level, because it is the right level that is probably the most efficient. and it would not end, but at least limit the damaging effects of the tax competition that is harming all our countries and is harming us within the European Union. Thank you.
Thank you for this really interesting and constructive debate and remarks. Now we will move on with the answers. We have around 12-15 minutes, and we'll start with Dmitri. I heard plenty of questions that were asked from you, so please start.
Thank you, Remo, and thank you everyone for these wonderful comments and questions. I'll be able to tackle all of them were directed at me and some more probably as well. In terms of the question raised by Spain in terms of VAT rates, I think this is a very interesting debate that has to happen on the European level as well as the national level, and the question of what is fair and what is less fair in terms of single rate for everything, and then the subsidies. This is a very interesting question, but it remains absolutely a political question. Many member states actually mentioned CCCTB, or actually talked about CCCTB without mentioning it. I think it's a very interesting debate that's ahead of us, and Estonia has taken up the assignment of finishing the first reading of the new proposal from the Commission. We know that it's progressing slowly, but it's still progressing. And so the question there is that some countries have very complex corporate income tax systems, that they have historically huge legacy, and other countries have very simple systems. So when we talk about introducing CCCTB, it's only natural that those countries who see this as an opportunity to get rid of their old system, to get rid of their legacy, see this as a perfect opportunity for something more simple and more robust. But at the same time, of course, there are countries that feel that they will be losing. So I think a proper balance and a lot of talking about this system, a lot of analysis will definitely get us to the point where we're able to agree. I am a very big proponent of digital CCCTB, because this is a new regulation that's possible, but we will have to see where the member states agree, and the discussions happening at the moment are extremely intensive in the Council. In terms of the question from Estonia, and by the way, the Estonian delegate is the one who was the head of the tax administration at the time when the electronic tax returns were introduced. How far the preparations are for pre-filled VAT? Well, I think the tax administration nowadays is able to go even further. As I said, that perhaps tax returns will not be needed in the future. The tax data will come from the taxpayers themselves if they are able to trust the tax administration and give access to their systems. But as long as this is not here yet, I think pre-filling of VAT returns is an important topic that still needs to be on the table to be discussed. For the Latvian question, yes, we do fight withdrawing of corporate income through loans to abroad, and there is a specific provision that actually says with long-term loans given out to abroad, the burden of proof rests with the taxpayer. That is really a loan, not a profit that has left the country. And for the withholding system and the social security, we're actually quite similar to the Latvian system, with an exception of the regressive non-taxable minimum from next year that will be similar to Lithuania. So we're probably able to discuss that in more details afterwards, should you wish so. For the CCCTB again, and it's linked to probably structural funds, I think this is a very big question for politicians to discuss on all levels. We know this is a big question, this will remain a big question, and this will be a big question on the European level. So yes, there has been talk of this, and it is on the agenda. For the tax on web-based companies, as was commented by Italy, is a very big priority for the Estonian administration during the presidency to talk about this, and hopefully we will have council conclusions at the December ECOFIN in terms of taxing digital companies. So those of you who have followed this, you will definitely know that this is a big question being discussed at the moment. For the question from Cyprus, there is documentation, there are regular reports from OECD, Forum on Tax Administration, that are very large. I mean, they're very long and they contain very much information. So they compare different tax administrations. So if you're interested, please do look into it. And one of the biggest indicator is cost of collection. So how much does it cost for a country to collect 100 euros of tax income? And I guess I'll stop here. There were many more interesting questions for which I thank you.
Thank you. Now, Ms. Fábregas, your comments. Thank you.
Thank you also for the very interesting comments. It's very important for us also from the European Commission to be able to listen to what the members of national parliaments consider on these issues. So I will focus on the three key issues. First, on the VAT. VAT legal framework today is not up to what it should be, in the sense that we have an internal market, a single market since 1993, but the VAT system is still built on borders within member states. Therefore, we are still talking about cross-border within the internal market on VAT issues. Therefore, our proposal that was presented in October, what tries to do is to create a single VAT area. And this single VAT area is to be created not through a generalized reverse charge system, because it could create more fraud in the sense that you have only one person at the end that has to pay. If you don't know that person, can disappear. But more based on the principle of destination and on the use of the one-stop shop. Although it is true that for certified taxable persons, that it's a new concept that we have introduced in this proposal presented in October, for certified taxable persons, a reverse charge will be used. But those are persons known by the tax administrations. Therefore, there should be no fraud in this regard. There is no possibility for a carousel system in this regard. So that's our goal. Proposals are on the table. There will come more proposals in spring in order really to reshape completely the VAT system. And this goes for comments raised by other delegations in terms of rates, in terms of modernizing the VAT system. Rates, as highlighted by Dmitri, is a very political issue also, and here we have to take into consideration subsidiarity elements in terms of what can be achieved or not in the modernization of the rate system. Then, concerning CCCTB, clearly this is a key priority for the Commission. We are again an internal market, a European Union, and it is true that the treaty includes the principle of fiscal sovereignty through unanimity and subsidiarity principles, but we are in the European Union, so we need to make sure that the system is fair within the European Union. And that's the reason why CCTB is on the table, and that's the reason why the European Commission also is looking at how to bring the digital into the CCCTB discussion, because this is one of our key priorities. And this is my third point. We are on the Commission working on digital tax. We issued the communication. The Council now, Estonian presidency, is working on Council conclusions. In spring next year, the European Commission will bring forward a proposal in order to bring on the table a legal text on which member states will be able to discuss and agree in order to solve a problem that does exist today. Because today, if we talk about this digital economy, the tax system today is not fair for our citizens and businesses, in the sense that some of the players are not paying their amount of taxes that should be paid within the European Union. Thank you.
Thank you. And now, Mr. DALLIER.
Juste un mot pour terminer. Je crois qu'il est...
Thank you very much. I have a few words because I think it's quite satisfying to see that everybody seems to be aware of all these possibilities which come with the digitalization of the economy, how we can develop this further and how we can collect taxes more efficiently. But at the same time, we know that the world changes very fast, and it's quite clear that sometimes it's difficult for us to adjust our rules. I'm convinced that this is something we can do efficiently when we cooperate. We do it across the EU. And this is something which is really very important when it comes to the collection of the VAT. This is one of the main revenues for our budget. So therefore, it's important to adopt these decisions very fast.
Thank you, dear panelists and dear participants, for the comments. I think the question of fairness in terms of EU funding and collecting taxes in a member state is also a question of debate that is facing all of us in the near future. This is also one remark came, I think, from Germany. So let's think about it all together, maybe in the next events. Before we move on to the coffee break, I would like to give a word to the next presidency, Bulgaria. Bulgarian delegation has one announcement to make, please.
Is it working? Thank you, Mr. Chair. First of all, I would like to thank the organizers for having us here and facilitating this very important meeting. And thank you for the program last night. It was really thrilling. Unfortunately, we have to leave to catch our plane. So I would like to remind you that Bulgaria is taking over the presidency starting January. And the next interparliamentary meeting on stability, economic cooperation, governance in the European Union will be held at the European Parliament in Brussels on February 19th and 20th. So we look forward to seeing you there. And it will be a great pleasure for us to co-chair this meeting. Thank you.